Let's now turn to property and affordability, which extends, I guess, both to home buyers, but also obviously renters. With prices again on the rise, there's been increasing focus from both the private sector and government on finding solutions to make property and finding a home more affordable. But how big is this problem? Is it become too big to fix, perhaps? Anthony Landahl is the Managing Director of Equilibria Finance. He's joining us now. Anthony, good to catch up with you again. Thanks for joining us. So interesting that that affordability is sort of back on the agenda as such, because we did see those prices fall, of course, as we saw those interest rates rise. We have seen something of a bottom of the market with those prices beginning to rise again, not just, of course, in terms of trying to buy a home, but also we're seeing extreme tightness in the rental sector. So how would you describe what we're seeing in terms of property affordability at the moment?
G'day, Andrew. Great to be here, mate. Look, I think what we're seeing is that this housing affordability crisis, if you like, is cutting across broader than just the overarching issue of low stock. We've got an issue with people actually being able to get into the market with purchases, with capacity down some 30 to 40%, deposit being a challenge. We've got an issue with renters, not only in terms of renters being comfortable with where they're staying, renters' tenure, maintenance, those sort of issues, but also in terms of vacancy rates are down to 1% nationally, and 40% of rentals have had an increase in rent of over 10% in the last 12 months. We've also got a problem with actually attracting new investors into the market. About 30 to 40% of the Australian property market is made up of mum and dad investors, and what we're actually seeing is investor activity drop. We're also seeing investor selling of existing properties at record highs for recent times. The average is about 25% of stock coming from investors onto the market. That's over 30% at the moment. So we're finding issues across the board with purchasing, with renters, and also with attracting new investors to the market. So it's cutting broader than the fundamental issue we've got of supply and demand in our housing market.
And I guess the problem, Anthony, is there is no quick fix.
There's no quick fix. Every solution you look at takes time to implement. And one of the biggest things is we're working in such a fragmented market. There's so many conflicting issues we're trying to resolve. Investors buying properties that potentially would attract owner-occupiers. The tension between the renters and their needs around tenure, around stability, and the landlord's needs around capital growth and yields. So it's about trying to broaden the pool of funds coming in from private sector, from government, from international investors, and also incentivising those mum and dads as well as that broader market to try and start solving some of these problems that are going to take some time to solve.
Yeah, additional pressure obviously with Australia's immigration rate having ramped up significantly after those very quiet years through COVID. What does that do for affordability? Greater pressure, of course, on demand for homes, but I guess you would find with new immigrants, they're looking to, well, maybe not buy. Initially, it's a rent, isn't it? Established homes.
Yeah, interesting question. Traditionally, a lot of the new immigrants have come out and looked to rent. We've seen an uplift in inquiry from some immigrants, up about 30%. Normal looking at actually purchasing properties now. So politics aside, skills shortage aside, in terms of our housing crisis, and some data I read recently was we're going to be short 1 million houses or something across the country within the next 5 or 10 years if we don't address this issue. So increasing our population at the moment is counterintuitive to the genuine supply and demand issue. And whether those immigrants are renting, adding more pressure to a shrinking market for renters, or whether they're looking at buying, which is cutting some Australian owner-occupiers and investors out of the market, it is adding to the problem, not helping solve it at the moment.
Anthony, what's it going to take for investors to come into the market, not to buy, but to build?
Yeah, there's got to be some new thinking around this. Part of it is the government incentives, and part of it's looking outside some of the things we're currently doing. Obviously, we got the government investment. They announced in the budget some schemes there looking at a $10 billion investment. We've got the build to rent programs, and they're getting some international and institutional investors, and the government set up some tax incentives around that. But there's an interesting concept about bought to rent, where it's a program quite common, say in North America and Canada, where you actually get managed funds and the institutions to actually buy houses or blocks of units that are specifically designed for renters, but mum and dad investors can actually invest in those schemes. They can buy and sell within that. So the investor is still getting the returns, the renter's getting more stability around what they're doing, but it might also be another area we can look at. I guess it's called bought to rent, where you get the larger institutions looking at those sort of residential investments to add to some of the stock in the market, as distinct from some of the programs that we're building to then rent.
Anthony, is there much of a trend here towards fractional ownership, i.e. those who don't have enough capital, obviously, to actually buy a home outright or even with the assistance of a bank loan, but you join with investors to buy a property?
Yeah, we're seeing a little bit of that. We're seeing it on both fronts, actually. We're seeing the rental market where there's people sharing rooms. So someone might have an overnight shift and they might use the room. They might share the room with someone who works during the day, for example. So we're getting more and more of that sort of stuff in the rental market. We're also seeing purchasers looking at buying a block either between friends or family members, or fragmenting it with some investment as well. So there is actually new ways that people are thinking about home ownership, and also just renting a property and actually having somewhere to get a roof over their head at the moment.
And Anthony, what are your observations with trends with loan growth at the moment? What are you seeing right now?
Yeah, we are seeing a market that is genuinely slowing. I touched on it before. Investor behaviour still paused, essentially. Owner occupier and other activity in the market has slowed. What we're tending to see, though, is that there's concentration around the property that is on the market. So there's a bit of concentration, competition with stock, which is keeping the market, which is helping keep the prices strong. We're seeing reasonable flows of credit, but it's definitely come off those peaks from 12 or 18 months ago. People are a little bit cautious. Can only borrow 30 or 40% less than what they were able to. And that uncertainty around the interest rates and the cost of funding has definitely slowed the market across the board.
And what are you seeing in terms of perhaps distressed loans leading to distressed sales?
Yeah, we haven't seen a lot of that activity at the moment, but I think there's a lot of concern over the next 6 to 12 months with these fixed rates. We're really starting to see a lot of these fixed rates coming off. There's some 440 odd thousand over the next 12 months. We're probably 2 or 3 months into that data set there, but we are starting to see some people, and we're having even some genuine inquiries from outside our own client base of people starting to go, look, we're genuinely struggling here. We're going to have to think of either downsizing or selling. So people are starting to think about that more than maybe 6 months ago. We're also seeing some investors actually sell to free up some cash flow, because the cost to hold their properties is becoming too burdensome with inflationary pressures, funding pressures, and also the difficulties of the rental market and maintaining the properties at the moment.